Hello, everybody. Good afternoon. This is Alan Lozano with the Property Hermanos team, and we have the beautiful Miss Josie Rees. We are here this afternoon. Wanted to check in with you guys and wish you guys a very happy new year. We're happy to be back in business. Everything's back open again. The holidays were great and relaxing, but we're ready to get back to work. And one thing that's big on everybody's to-do list, hopefully, right, is to get into a new home in 2023, right? And always the number one things that we hear, right? Of course, we love helping people find homes, but always in the dialogue and, probably one of the most important pieces is, how are they going to be able to buy it? How are we going to make this work on the financing end? So with that, we wanted to bring you guys a very special guest. I myself have known this special guest for many years since I got started in the real estate industry. She's an expert in the mortgage business, and it's our pleasure to welcome Miss Avery Duke to the program today, or to the episode. We have Avery with us today, and what we'd like to focus on today are the top 5 mortgage questions with a mortgage expert, right? So, we always, and Avery touches on this all the time, we're realtors. Avery's on the loan end, on the financing end. So we want to make sure to stay in our lane, the financing lane. That's Avery's area of expertise, right? So let's jump right into it. Avery, sound good?
Yes, sir. Let's go.
All right, cool. Top 5 questions. Question number 1. What documents will I need to provide in order to apply for a mortgage loan?
Excellent question. I'll keep it simple. You really want to just be prepared to provide 2 years of W-2s. In most cases, I will say, lots of people say tax returns, but in most cases, we don't even need tax returns. But W-2s, 2 years, your most recent 30 days pay stubs, right? And your most recent 2 months of bank statements, because we want to look at assets, we want to look at how much money you're making, and then historically over 2 years. And if it is not the same job, that's okay. We just need those W-2s. And of course, we want a valid photo ID, and that's the basics right there.
Awesome. Sounds good. So real quick on this particular question, a lot of people want to know, what is the difference between getting pre-qualified and getting pre-approved? What is, just real quick on a side note on that question?
Yeah, that's a super, super duper good question, Alan. Obviously, that's why you and Josie are doing the big stuff, because you asked the right question. So you definitely want to ask the lender on the other end, if you're on a listing, is this client pre-qualified or pre-approved? And this is why. So the difference between being pre-qualified and pre-approved is that a pre-qualification means I only pulled your credit. And I looked at your mortgage application, and I'm looking at what you put on that application along with the credit pull, right? So that's in general what it can mean. Now, for me, it's a little different. My pre-qualifications will go a lot deeper, but in general, in the market, that lender probably just pulled credit and is looking at an application, they're pre-qualified, right? A pre-approval absolutely should mean that the income documents have been approved and reviewed, right? Along with the credit pull. So what that means is, in my case, I've actually had an underwriter partner with me on that. So when Alan and Josie are making offers with their clients are going to close in 21 days. Income has already been done. We can put 0 days on that third-party financing addendum upon the first offer, right? So that's the biggest difference right there.
Awesome.
Oh, wow.
Awesome.
So like pre-qualifying is going off of what they inputted, and pre-approval is after you've done all the homework, you've looked at everything, and it's like, all right, this is the exact amount here.
That's exactly right, Josie. And that's in most cases, right? I mean, obviously, if you've got a relationship with your lender, which is the key, it's huge. You're probably having a conversation with that lender. I've had conversations before, I know with Alan and Josie even, where we were moving really fast. And I say, hey, because we have a trusted relationship, I've looked at this, I feel really good about it. We'll hit a pre-qualification letter, but I want to move real fast to get it in front of an underwriter, but just so that you guys can make your offer and it's strong. And then I get on the other end and talk to the listing agent and give them some background so that we're making strong offers from a unified standpoint.
Awesome. I love it when you do that. Yeah. So our second question involves credit score. So we get a lot of questions, especially during that first initial conversation with clients. They're just like, well, my credit is good, or my credit's not so great. So question number 2 is, how does my credit score affect the mortgage loan process, and what can I do to improve it?
So I'm going to keep it super simple because credit score is not as simple as people think that it is. And oftentimes when people are talking to you guys before they've spoken to me, or maybe vice versa, they're saying, well, I've seen my credit score on Credit Karma or another credit reporting system through their bank. And oftentimes that credit score is different than what I pull when I'm pulling for a mortgage. A mortgage credit score is a FICO level 4. It's a much deeper algorithm to come up with the score than what you would find for purchasing a car or opening a credit card. So more often than not, that score is about 20 to 40 points different when I pull it. And so how does it affect your mortgage? It affects what rates you're going to get. It affects what types of programs that you can qualify for. It affects how much in closing costs that you're going to pay. A lot of things. It's almost every single aspect that it affects. What can you do to improve it? It's super important that before you decide you're going to work on your credit and you want to buy a house, that you do let a mortgage lender pull your credit. And the reason why is because you could sit with someone that's an expert in consolidation of debt or helping you to increase your score, but that gauge and that system that they're applying to your score has absolutely nothing to do with buying a home. Because remember, I told you the algorithm is different. So it's really important that if you're going to work on your score specifically for buying a house, that you do it with a mortgage professional.
Because they know what to look for.
Awesome. Yeah, that's super, super important. So thank you for touching on that. Okay, moving on. Question number 3. How do you determine the maximum loan amount that a borrower is qualified for?
This is another great question. And I forget how important this is oftentimes because, for me, these numbers come really easily and I just do it all day. But what your borrower or your buyer is looking for is it's based on the payment that they can withstand against how much income that they're making versus how much debt they can withhold against that income. So it's not necessarily the $400,000 mark is their max. It might mean that $3,500 is their maximum payment, which depending on where you're buying in the state of Texas and the tax rate could mean a $420,000 home, or it could mean a $350,000 home. It just depends on the taxes because to answer the question, we determine the loan amount based on the payment. And what varies there is most likely the property taxes.
Got it. Yeah.
Yeah, because a lot of people don't even take into consideration the property taxes or the payments or anything like that. It's always just kind of the usual, and they leave the property taxes out.
Yeah. Josie, to your point, what I've found in my career, a lot of times people will go online. They'll look at a payment and they'll say, oh, I'm going to look, or they'll look at a home that they see that they love, and they'll go on and do an online payment calculator. And those payment calculators are usually a couple $100 off. The calculators that people use online they're estimating your taxes, your homeowner's insurance, your mortgage insurance, based on national averages, right? And oftentimes based on higher credit scores than the one doing the estimate might have. So it's kind of a moot point to use those online calculators. It could give you a gauge, but just know it's probably going to be off by a couple $100.
So good to know.
Yeah, good to know. And right, sometimes some of those online mortgage calculators, they're factoring in a big down payment in a lot of those instances, right? At 20% down or something like that.
Exactly right.
Yeah, so awesome. Great to know. Yep. Okay, next question.
So number 4, can you explain the closing costs associated with obtaining a mortgage loan and how are they paid?
Super good question. So I'm going to keep this again super simple. As lenders, we like to get into the details, so I have to remind myself. Let's keep it simple. So
it's all good info, though. It's all good info.
Thanks, Alan. Thank you, Josie. So here's kind of how it works. I'm going to tell you what it is, And then I'm going to relate it to how people outside of my industry would look at it so I can close the gap, okay? So closing costs are the costs involved with getting your loan from the application stage to the closing table. So closing costs consist of your title policy, appraisal, lender fees for underwriting and processing, credit reports, all those types of things, right? But then you've got what's called it's separate, and those are your prepaids, okay? So they all come together for the average person would look at this all as closing costs. Technically, the closing costs are fixed. The prepaid portion, which is your taxes, your homeowner's insurance and interest rate, those pieces are variable in your estimates until you have an actual property to lock those numbers in on. So it's almost like there's this big chunk and then this little chunk that goes into it, right? And this makes up what you would assume are all closing costs, okay, to get the loan closed. There are things that you can add and take away depending on who you're talking to as far as your mortgage lender with options. But here's one thing that's important as a mortgage lender. Alan touched on it before, and Josie and I, we always agree. I'm in my lane and they're in theirs. I don't touch the negotiation piece. So I'd love for you guys to touch on how you negotiate that and how that affects the closing costs, because what you and I have always done is, here's what the closing costs are involved in this house. And the reason they vary is because, remember I said prepaids, they're the little C, right? Those taxes and insurance. Remember what I just talked about, taxes are variable. So once we have a property and I can negotiate, again, lender relationship, that's why this is important. And I can say, hey, Josie, this property has this much taxes on it, so our closing costs are going to be here. So that when you guys go and do your job, you know the number that you need to negotiate. But I'll let you guys touch on that piece, on how they're paid for.
Yeah. So, one thing that we always want to make very clear to, our buyer clients is that closing costs are separate from the down payment, right? So a lot of times people think, I'm a VA buyer, I'm able to come in with zero down, right? And that's correct, right? Zero down payment.
Yep.
But there are still closing costs associated, right? So that's one thing that we always clarify. And as far as negotiating those closing costs, with everything that's gone on, especially in the market lately, inventory has gone up a little bit, rates have gone up a little bit, but they're coming down a little bit too, which is good, right, Avery? I mean, that's what we're experiencing. Yep. So with that being said, we're able to negotiate closing costs a little bit more. So what we're telling our buyer clients is it's actually a really good time to buy because it's not as competitive as it was, even earlier in 2022 and then 2020 and 2021, forget about it. That was nuts.
Yeah.
The market was nuts. So we always try to go in and negotiate on behalf of our clients. And hey, if we can get a better sales price and negotiate those closing costs and have the seller actually contribute some money towards the buyer's closing costs to offset their cash to close and their money out of pocket, we're always going to do that. But again, like you said, working with a good mortgage lender, we understand, hey, this buyer, they might be a little bit tight, right? So we might need a little bit of help on the closing cost end. So we all go in, everyone's on the same page, and we can get that done for our clients on the negotiating side. So you're right. Everything works hand in hand.
It works hand in hand, and I love, again, good foresight there. I love how you touched on the difference between your down payment and closing costs, because you're right. I mean, there are a number of veteran buyers or VA active duty buyers for the first time are going, well, I don't have to come with any cash. And that's, to your point, the down payment is your good faith contribution to that loan, right? The FHA loans require it, and so do conventional loans. But USDA and VA loans don't require that. However, to your point, there are closing costs involved. And I know that we have partnered in our conversations and I've said, hey, we've got this fabulous buyer. This is their first time buying home. They have $3,000 saved up. We're super excited, but it looks like there's going to be about $12,000 in closing costs. And if you say, look, Avery, we can do this, I can get $5,000 from the seller, that's the max, and they really want this house, there's also down payment assistance. Sure. And I want to clear a myth there, right? It's down payment assistance. However, that down payment assistance can cover closing costs. It's not just towards the down payment. So that's another opportunity. I don't want anyone here to think, well, I don't even have $1,000. We have that consultation and we say, hey, let's see how much money you can come up with. Alan or Josie say, I know I can negotiate this much in this market. Again, you want an agent that understands negotiation. Definitely. Anybody can find you a house, but not just anybody can get it at the terms that you require to be able to buy the home. It's extremely essential. So if they know they can negotiate, and I can say, hey, no problem. This buyer also qualifies for our down payment assistance program, and we are golden. And so you guys get to go in, and other, agents that are listening to this, you want to be able to go into that negotiation super confident, knowing exactly what terms that your client can qualify for. And so when your listing agent is challenging you, is this going to work? You're super confident to answer that call and get your client the deal.
Definitely. All good information. Yeah. And that's why, having this conversation before we go shopping and all that, that's why all this is super important, right? So We're all on the same page. Okay, cool. All right. Last question here, and then we have a bonus question for you. Okay, Avery? Okay. Number 5. Are there any special programs? Hey, kind of like we talked about it. The down payment assistance is a special program, but any special programs or options available for self-employed borrowers or those with non-traditional income sources?
Good question. This is just, again, brings home the depth and the breadth of your experience in this market, because this is a huge, especially now, right? We've got a lot of self-employed borrowers that are ready to buy, and they get told no because why? Because their tax returns show that they don't make any money, right? Now, it's kind of a point of contention for me. I don't want to get on my soapbox, but I know, right? Especially our realtors out there. You guys are self-employed. Oh, you got to wait 2 years. But yes, there are programs out there. We can look at your bank statements. We can look at the influx of cash. And there's a specific calculation that we have to do there to account for expenses. But I've got a client right now that we are doing, yes, this is true, no income, no assets.
Wow.
And we're all to buy a home. Yeah. Incredible. Now there's some, there's obviously some nuances there. It's a heftier down payment, but if you've got the cash and we just can't show traditional income, we absolutely have ways to work around that. The bank statement loan is probably the most popular. But if you're looking to buy a second home or an investment property as a primary, and you already have your primary residence, we do have an option to do no income, no assets.
That's crazy.
So you're telling me there's a chance.
There's a chance. Even when I was getting this one ready, I was like, all right, this we can do this, right?
Yeah.
It feels so off, but it is a done deal. Yep.
No, that's amazing because when I was filing my taxes last year, of course, I had this amazing year in real estate, made more money than I did at my previous position. Things were great. And I was like, oh, this is awesome. I'm going to go get myself my first house and build wealth. And then according to the IRS, I only made like $3,000 after I wrote everything off,
And I try to tell people, you just plan ahead for that, right? I mean, I'm not going to lie, you will get better rates by using traditional ways to get a home. Like by having better tax returns, you have better options, right? But there are still options. I mean, you get the house, if you want the house bad enough, you get it now with the higher rate, you refinance later once we can, come together. And I am not a tax consultant. I'm not a CPA, but I do know the direction within which to take a client to talk with their CPA on how to set their taxes up, to be able to get better options later on down the road.
No, that's good to know.
Got it. Okay, so Josie, you want to ask Avery the bonus question for today?
This is my favorite question out of all of the questions so far. If you could have any celebrity as a client, who would you choose and why?
Jason Bateman.
Oh, good.
It was like, just right. She was like, this.
And I promise this was a surprise question. We didn't tell her this question.
I did not know you asked this question. You know why? Because he would probably have me freaking rolling on the floor. But he's also super smart. So he, I'd imagine that he'd probably have all his ducks in a row. And we probably could just, shoot the crap the whole time and oh, at the end of the day, it's a house, you know?
Yeah. That's awesome. That's awesome. Well, good answer. That was a fast answer. I love it. So Avery, thank you so much for taking time out of your day to sit down and chat with us. And for all of you guys watching, we're going to go ahead and put Avery's contact information in the description below. Avery Duke with Legacy Mutual Mortgage. If you guys need anything on the mortgage end, contact Avery and contact us. We're happy to help you guys as well. We'll get y'all in touch with Avery and we can all do a deal together and get you guys the home of your dreams, right? So thank y'all for tuning in. And Josie, you have anything else?
Avery is amazing to work with, and I am super excited to share all her contact info with you all. So we look forward to helping you in your home buying in 2023.
And cheers to a great new year and maybe even a great new house. Right, Avery?
Cheers. Absolutely. Thank you guys. It's always a pleasure.
Thank you.
Thank you.